we detected an unusual trade worth $1 million on SanDisk stock, ticker symbol SNDK. But here's what makes this even more interesting. The stock just hit a new all-time high. So the big question is, will it continue breaking out to new highs or drop back down? According to technical analysis, the stock is very overbought, which could signal that it's due for a sell-off, pulling back down lower. But with this kind of momentum, it could just as easily keep climbing up higher. That's why technical analysis can often be confusing. And that's exactly why we also look at the data to see what wealthy investors are actually doing with their money. So in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish in buying, expecting the stock to move even higher, or bearish in selling, expecting it to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into the unusual option activity to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. Speaking of members, if you were in our membership earlier this year on this day, April 14th, near the bottom at its low, you would know that we went long bullish on SanDisk as one of our exclusive private trades that we shared with members only. That trade did very well because the stock went up and we locked in profits over here when those options expired on June 20 before the stock pulled back. And so this was our video analysis from April 14th that we shared with members only, showing the data behind why we were going long bullish on SanDisk, because we detected these unusual options that expire June 20, worth approximately $3.9 million. And after the stock went up, this was our video update on June 20 that we shared with gold level members, showing how we managed our trade, which made 262% profit. So if you want to see exactly how we got into this trade, check out our video analysis up here. It's a good example of the kind of content members get access to inside our membership. Now, after we locked in profits on June 20, the stock pulled back slightly, but we entered a new trade about a month ago on this day, August 8th, when we detected another unusual trade. And that's also very profitable because the stock just hit a new high. As you can see here, this was the email we sent to members, alerting them of unusual option activity detected on August 8th. And so we analyzed those unusual options being traded in SanDisk stock and went long bullish when the stock was trading around $44 per share. Now it's trading at $68 per share. So even if you traded the stock instead of options, it's already highly profitable because we got in early. And so if you want to start getting full access to these profitable opportunities, including these email updates, consider joining the membership on our website. We'll put a link here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing the exact profit is what allowed us to use a smart risk management strategy and set up our next trade based on the new data. So let's take a closer look at our trade, the same one made by this wealthy investor, these September 19 options at the 45 strike calls. This investor bought 5,500 contracts at a price of $3.10 each. Since options prices are shown here, and each options contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $310. And so let's take a look at how much these options are worth now. As we can see here on the option chain, for the September 19 options at the 45 strike calls, these contracts are now worth between a bid price of $2,350 to the ask price of $2,390. And remember, these options were only going for a price of $310 each when we entered this trade. That's why it turned into such a profitable trade. So how much return on investment did this deliver? Well, let's take a look at our trade using the risk profile graph, analyzing those September 19 options at the 45 strike calls, which were priced at just $310 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see in the blue line that if the stock had dropped down, it would have been a negative $310 loss, the entire cost of the trade. But instead, it went up to over here. So we have a profit of about $2,063 per contract. And so to calculate the profit percentage, we take $2,063 divided by the initial cost of $310 and then multiply by 100 to express it as a percentage. And that gives us a return of 665% profit in just 1 month. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. So if you want to get access to deep insights like this, then just head over to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, even before we share it with the public. So if you're tired of being late and want more time to act on these opportunities, just head over to our website, where you can see exactly when and which stocks wealthy investors are trading on Wall Street, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's the reality of trading. No one wins on every trade. But just one of these winning trades like this can offset several losing trades and drive long-term growth, making a significant impact on our overall net profitability. For example, we could lose 6 trades in a row capped at 100% loss each and still be up positive by a 65% net gain thanks to just one winning trade like this. Now, if you've been following our work, you know that we do not lose that many times in a row. In fact, it's usually the opposite because we win a lot more trades. But the point is this: too many people obsess over win-loss ratios. What really matters isn't how often you win, it's how much you make when you do win. Maximizing gains on winning trades and minimizing losses on losing trades has a far bigger impact on your bottom line than chasing a perfect win rate. That's the edge we focus on. And so to stay consistently profitable over the long run, we use strategies with a better risk to reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we used new data to update our trade here into a strategy that gives us more upside potential while keeping risk under control. And so we closed out of our 45 strike calls by selling them, locking in profits, and rolled into a new unusual trade we just detected. As you can see here on the options time and sales tape, an unusual trade happened on September 5th at 10:12 a.m. at the 9-second mark, for these October 17 options at the 75 strike calls. Thousands of contracts were being traded, and they were also being traded at roughly the same price of $214 per contract. And so we can calculate the total cost this wealthy investor spent by multiplying this price per contract by the total number of contracts traded. So how many contracts did they actually trade? Because it's not just these contracts that you see here. There's more than meets the eye. That's why we always take a closer look at the data to improve the accuracy of our analysis. So let's check the option chain for these October 17 options at the 75 strike calls. And we can see here that 4,900 contracts were traded, spiking the volume significantly higher than the existing open interest of 0 open contracts, which tells us these were new contracts being opened, not existing ones being closed, because it would not be possible to close out any contracts if none were opened previously. We always take this extra step to verify the data at a deeper level, because many other websites and scanners don't. They simply report all high volume unusual trades without filtering out closing trades, which leads to wrong results and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, we confirmed that this wealthy investor was opening new contracts. Now, keep in mind, some of these contracts could be other traders jumping in, including ourselves and our members. But to estimate the cost of this unusual trade, we take the volume of contracts traded, 4,900, and multiply by $214, the price we see on the options time and sales tape. And this equals a total trade size of approximately $1 million for this unusual option activity. But keep in mind, just because a trade is large does not necessarily mean it has a high probability of success. In fact, this one carries more risk than the smaller, more selective trades we share on our website. And so, if you want to get access to those lower risk trades with a higher probability of profit, then head over to our website. The link's in the description below. Now, with that said, even though this trade carries higher risk, we still took it, but that's because we used a risk management strategy to lock in profits while simultaneously reducing exposure. As you can see here, we rolled into this new position at the 75 strike calls from our previous position. POS stands for our position, and the green color indicates a buy position. So we used the profits from our previous 45 strike calls to buy these 75 strike call options, which cost less than what we sold the previous position for. That means we enter this new trade at a credit, not a debit, reducing our risk by using only the gains from our earlier trade. And so when we analyze our new trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same September 19 options at the 45 strike calls. So we are just left with these 75 strike calls that expire October 17. And so on the graph, you can see that if SanDisk stock goes down or even crashes, our trade would not have any negative loss because we've locked in more profits than the cost of our new trade. This is how we manage risk, by minimizing losses, and in this case, we completely eliminated any possible loss while still staying in the trade to gain more profits if the stock moves higher. But remember, this was only possible because we followed that wealthy investor early, back on this day, before the stock surged to a new all-time high. So if you want to get access to our analysis and alerts, just like this one here, before the stock took off, then sign up on our website. We'll put a link here. And if you would like to see a real example of our past membership trade on SanDisk when we bought near the bottom, we'll link that here as well. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.